Okay, welcome to the analysis of Apple. This is going to be prior to earnings. Earnings comes out Tuesday. Let me get the exact date. Tuesday, the 18th of October. So, jumping right into it, we see that Apple, this is a 4-hour chart of Apple. We've seen the run that it's made from, let's see, 354 to 422 basically in 2 weeks. Pretty incredible. $65 move or so. But I want to show you what Apple tends to do, not necessarily over this earnings period and trade-off of earnings, but just in general, what it's done in the past 3 months or so, and how you can form a trade off of it. So I want to zoom out and bring in July to August, and you can see here the point of control for July. This profile right here, where you can only see half of it, is for July, and then August starts. So we can see this little triangle that formed, and normally, well, some people, they would say, whatever, it's just a consolidation pattern, but it's against the point of control of July, and maybe that's an opportunity for someone maybe to short Apple or buy Apple puts, or maybe sell a call spread above Apple. But you can see, how it formed and where it formed against, whereas, another month, it may not, put it this way, if it doesn't form against the point of control, it's not a trade that I personally want to be a part of. But if it does, it interests me, because that's where the most volume's taking place, and that's where the most money's at stake. So either way, it's going to have a decent move after that point of control is developed. So let's see. Okay, going into August, we can see we had a similar formation. You see our point of control around 365. We had, a few higher lows, this little triangle pattern, and then a breakout. And this one, as far as the move in dollars, this one back at the beginning of August was 390 down to 345, so $45 drop. That's pretty significant. But this one, it was a little more contained, about $15, but still a trade to the upside and still profitable nonetheless. And, going into September, we see that the lows came down to the point of control. This red line's the 50-day moving average, green's 20, yellow's 200. But you can see the price went down to the point of control, the 50-day moving average held. That's nice. You had a little double technical agreeance there, if that's a word. And we saw a bounce off of it, and higher lows were made. We had a little triangle pattern, and this was off the the August point of control, and bam, a move to the upside. But if you zoomed out a little bit, we had a bigger triangle pattern form. And let me just remove these drawings so you can see this bigger triangle pattern formed. And at the time, I'll just give it, let you know where we were standing. The point of control was around, I want to say around 390, 388. So let's just draw that line, and you can see it was like a tension buildup, and bam, a breakout to the upside. Beautiful move. If you're long, made a ton of money, and you know why. The setup was coming. You could see it coming. So going to September, we formed a point of control at the top of the range, and basically that shows me that there was a lot of stuck buyers, and consolidating right above the 20-day moving average, but it failed. It slammed down a ton. Let's see, 400 to 355-ish, so 45-point drop again. So it's showing you that the sellers were in control of that move clearly. But where did we test? Where did we come down to when price got down to those levels? Well, we saw the 200-day moving average, which obviously a lot of people look at. We see once again the point of control from August, and we found relative support there. And also, if I zoom out a little more and scroll over, you can see this volume profile chart right here on the side. This is the composite of the entire price action, not just a month-to-month basis. And you can see we have support around 350, but you see this significant volume that's sticking out, in this general range, and basically price is going to slow down in that range, and your point of control's the pivot of that range. And basically, we had buyers, let me zoom in, we had buyers come down to that range and swoop it back up multiple times. So that shows you that, people are either covering their shorts there, or they don't want to, or they want to be a buyer in that area. But anyways, going on into the move we just saw, you can see we had like a flat top, and we didn't know this was going to form into the move we've seen. But given the fact that it did drop against the 200, and we were at prior point of control support, overall support on a bigger time frame, it was right to buy, and especially when it perked above this point of control. And if you were part of that, and you're still long, you're making a lot of money. Personally, I took some profits when it got into this range. I think it was when it gapped up to around 410. That was the day I took half my money on Apple off the table, but I racked in about, I think it was 10% in profits or something. But you can see that taking all your Apple exposure off didn't make sense, and we continue to see upside going into earnings. This is the earnings run that we're seeing, and I would expect it may keep going higher and gap up for earnings, but I think if it gaps down anywhere, it's probably going to be a buy on Tuesday morning, and if it opens higher, Wednesday morning. If it opens higher on Wednesday morning, I think it's going to be a sell right in the morning. Don't buy into it if we gap up, and don't sell into it if we gap lower. That's what amateurs do. Watch what companies like Apple do on earnings, and whatever direction they go, after hours, it usually is the opposite on the actual next trading day. So, this just look out for Apple. See how, patterns form on Apple relative to volume profile, moving averages, and, chart patterns, and trade off of it. Make sense of it. Manage your risk. That's what professionals do, and that's what you should do.